There is no doubt that the pound got the better of the euro last year, but will 2022 see a similar pattern, or is this the year where the euro fights back and takes the initiative in this popular Forex pair? Welcome to our market forecast videos here at Zenfinex. My name is Connor Woods and I'm the Senior Market Analyst at the company who provides to you analytical and educational content on most trading days. Now today's video is going to cover a EURGBP forecast for 2022, and I will make sure this video stays valid for many months so you can keep referring back to it throughout the year. Okay, so just a quick recap on 2021 price action. First of all, EURGBP opened up roughly around 0.894 and ended the year down around 0.84. In fact, during the 12 months of 2021, only 4 of them were bullish candles, and as a whole, the euro loss to the pound could be pinned down to expectations on the Bank of England to tightening financial conditions to maybe support the pound, or simply a recovery from the Brexit slump in the pound that we saw a few years ago. More importantly, what can traders expect for 2022? And let's start with the UK first of all. Now, the first Omicron variant case was only confirmed in the UK in late November last year, and it's now the dominant variant in the UK. And you're probably listening to this and thinking, well, the UK aren't really putting any strict measures in, they're avoiding any serious restrictions. Why is this a factor? Well, the issue is that economic activity will be disrupted as record numbers of people are isolating. HSBC have recently said the obvious downside risk here is that the Omicron variant situation turns out to be more damaging than we have first assumed, leading to full lockdowns or significant falls in GDP. That's what they think. And moving on to monetary policy, which always has a massive influence on the value of a currency. The Bank of England increased interest rates to 0.25% at the December policy meeting, and on top of this, the Bank of England have hinted at further interest rates hikes during 2022, and this is all to meet the inflation target over the medium term. There will be pressure on the Bank of England to do this whilst avoiding any damage to the economy during a time of tighter financial conditions. So it's going to be interesting to see if they can actually achieve that. Now, what about the euro outlook? Well, it's important to note that the Eurozone countries are also facing COVID-19 difficulties, which is likely to damage economic growth prospects. It will be about who can come out of these difficulties in a better spot, and only time will tell here on who's going to be that victor. In terms of monetary policy, however, the approaches seem to differ, right? The European Central Bank has been actively looking to resist interest rate hikes. HSBC still expects that a dovish ECB stance will be sustained, and they've recently said, and I quote, with the ECB making it pretty clear at the December meeting that net purchases will last until at least the end of 2022, a rate hike before mid-2023 remains highly unlikely in our view. Now, this is something that could keep the euro down this year. And finally, if we are assuming that the Bank of England increases interest rates and the European Central Bank resists, any short-term yield movements will be detrimental to the euro against the sterling, and this is something to monitor throughout the year. To conclude and give my final opinion from a fundamental side, I see more reasons that EURGBP will fall than I do for it rising. And the main reason for me is the different approaches to interest rate hikes and monetary policy. But with that being said, there is a case for this already to be priced into the markets, which is always the case sometimes. However, if inflationary pressures continue, I think this will be enough to keep the euro down on the pound this year. Let's take a look at that chart anyway and look at some key levels to watch out for. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus 0 commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. Okay, so I'm on the chart for EURGBP now, and first of all, I'm on this monthly chart just because I wanted to show you last year. Look, you can see on my cursor's hovering now. 1, 2, 3, 4, 5, 6, 7, 8 bearish candles last year, which really shows the pound strength against the euro. But as a whole, we've really been in a range since this 2016 level. And you can see that we have the top of the range here and the bottom of the range here, which you could argue is liquidity on both sides. However, the key level for me to look out for, first of all, is how this swing low is going to hold. And this is a swing low from the 3rd of February 2020, which tested the lows of December 2019 and rebounded, and we had a huge upwards momentum from there. So you can see that we're now approaching this level. Are we going to get a break below? If we were to get a break below, then we could class this obviously as a break of structure. And I just want to mark that for you now. A break of structure below there. And that opens up EURGBP. Bear in mind we're on the monthly chart here, so these are actually quite big moves. This for me opens up this fair value gap that we have from where we had this recent bull run, which is the candle from 2016, June 2016. Now you can see that there's some inefficient pricing in here, which is why I've labelled it FVG, which is my target really for euro versus the pound for this year. And I'll mark that as our take profit level. Let's mark that as our 2022. So I think that's first of all where I see EURGBP fall into. And if I fall onto the daily chart, anything we target is going to be looking at that 0.81 level that we can see here. Now on the daily chart, you can see that entries have been the market has been fairly difficult to get into, purely because it's been on such a grind to the downside. But you can see that the market does create a series, really, apart from where liquidity was grabbed here, which is always a good sign that there's going to be bearish movement. You can see that really we have to just wait for the next kind of lower high to be formed, and where we could see that is really from this order block up here, potentially. These are just levels that I'm thinking of at the moment. So this could be our daily order block entry level. So we could see the market rally up and test. The reason the market could rally is we could see interest rate hikes already priced in to this market already, and we could see the market rally maybe up to that 0.84 level. But I don't see the market going any higher than that really in the medium term. But then I would like to see a rally down and break this structure low here, because as you can see, if you look on the daily chart, we have actually created, if we look at the break of structure, we have actually created a new lower low. So there is bearish signs coming for this EURGBP market. And potentially, if you wanted to be a bit more aggressive on your entry, we could either use the 50% of this order block to get a better risk-reward ratio, or we could simply use a test of the 200-day moving average, which also sits just where that order block is. And we look for any selling opportunities here. Stop loss sitting just above. Aiming for our 2022 take profit level, so a nice swing trade. And we're looking at around a 12.3 risk-reward ratio, which is a really nice risk-reward ratio. If you put 1% on that, you could make 12% if the trade was to come in, which is a great yearly return actually. So that's what I'm seeing mainly for EURGBP. For the bull case, obviously we're looking for a break of this high up around 0.864, and we can go looking for potentially order blocks up around 0.9. Don't see that happening, to be honest. I see some more euro weakness. I'm bearish on the euro, and I'm neutral really on the sterling. So that's it for today's video. If you have enjoyed this video, make sure you give it a thumbs up, and you also subscribe to the channel and get those notifications turned on, because that will mean the video gets sent straight to your mobile device and you'll never miss out on the video, and you'll get it as soon as it comes out. Other than that, I hope everyone has a great trading day today, and I'll catch you all for the next forecast video, which is going to be tomorrow. Cheers.